once you win, your money should be automatically sent back to the wallet that you own. So you don't really have to, operators do not really have to act as custodians, because it also puts them at a lot of balance sheet risk. And especially in custodial systems, all the money that you hold can be treated as debt as well.
You're listening to 15M Mastery, a show that empowers you with insights from the leading iGaming experts to enhance your personal or business performance. The show is brought to you by tech-driven affiliate and media company Already Media, and supported by the AI-powered data analytics platform Blask. And Yo Investments, a fund manager investing in outstanding people who are disrupting the iGaming, fintech, and crypto industries. Hey everyone, and welcome back to 15M Mastery. Today we're joined by Mitul Manish, co-founder and chief product and technology officer at Open Wallet. Mitul builds secure payment products that put users first. In this episode, we explore how self-custodial wallets can remove payment friction, cut costs, and open new markets for iGaming operators. Welcome, Mitul.
Thanks, Zima. Thanks for having me.
So let's start with the first question. Which payment step in today's cross-border player journey creates the most delay or cost?
So especially speaking of a cross-border payment, something that creates a lot of friction is anytime your bank does not really have a relationship with the other bank, then you're in a situation where your whole transaction journey becomes very unpredictable. So let's try to break it down. Imagine you live in America, you plan to send your friend some money. He lives in London in UK. And let's imagine you're trying to send $1,000 to your friend. If your home bank has a relationship with the other bank where your friend banks with, in that particular case, generally speaking, is going to be fairly straightforward. So you're going to get some amount of predictability in terms of rate, in terms of how much time it's going to take for the transaction to settle. But let's imagine if you don't live in a hot corridor of cross-border payment, you live in Nigeria, and if you're trying to send money to a different country, then if a lot of intermediary or correspondent banks are involved, that would not only delay the payment. So we're now talking about a couple of days to a week and every step in between, because in some cases you could have a lot of intermediate banks in between. That would also add a lot of cost. So to put things into perspective, the global cost average for a cross-border payment is close to 6 to 7%. If we talk about institutions exchanging or doing very similar trades, then they can do it at fraction of a cost. So as users, we do not really have a lot of options. You have a bank you bank with, and you're just tied to that particular bank. So the main friction points are the whole journey becomes unpredictable. It takes a lot of time. But at the same time, every intermediary bank would charge their own fee. It could be somewhere in the line of, let's say, $15 to $30. Your home bank would charge a fixed fee. Then you have to pay for a markup on top of the exchange rate. Banks do not usually use the mid-market rate as, for example, Vice does. So there's a lot of variable cost involved. And to add to the misery, when your friend would receive the money, a lot of times the home bank or the bank with which he works would also charge a receiving fee on top of it. So these are some of the things which make the whole experience a bit miserable. But if you're living in a first world country, I would say it's not that bad. And the system definitely works, but over time it has become, let's say, slightly outdated, and we're definitely looking for new rails for payment.
Yeah, sounds really good. But how do self-custodial crypto wallets could help or let a player in one country deposit and withdraw faster on a site based in another country?
There are a couple of different approaches that can be taken. Probably the first one I would love to discuss is whenever we are speaking about fiat money, then we have to include regulated institutions in between in order to facilitate the payment. So, for example, if you if you use a self-custodial wallet, let's imagine if you use Metamask or a Phantom or even an Open Wallet, we'd never ask you for your KYC information. You simply download the wallet from the App Store or the Play Store. You create your wallet, in some cases, also back up the wallet, and then you're pretty much good to go. Now, once we start talking about cross-border payments, that's where the concept of VASPs come in. A VASP is a virtual asset service provider. These are regulated entities approved by the different governments to perform not only cross-border trades, but what they can actually do is they can take in your crypto, convert that particular asset to a fiat money. So in a very regular setup, you'd need a VASP to convert your stable coins, or it could even be Bitcoin, to a fiat representation of it. Let's imagine you convert your USDT to US dollars using a VASP. And now you have a friend living in, let's say, Mexico, and he would like to receive the money in Mexican pesos. So what would happen is the receiving VASP, or the virtual asset service provider, will receive the money, and then that VASP would be responsible for converting that money to Mexican pesos. So what we have done is we've completely replaced the SWIFT banking system. So this transaction is not really going through the regular payment rails at all. This is going through the new payment rails. And one of the really good examples to do such a trade is by using UMA, which is Universal Money Address. But there are a lot of other protocols coming up where the underlying rails or underlying payment method, whether be it Lightning Network or it is stablecoins, is completely abstracted away from the regular users. It's only used for settlement. Crypto inherently is global and borderless. So, it is a 24/7 market. A lot of these currency pairs are very liquid as well. So you go from somewhere from 3 to 4 days or even a week to a few minutes where your transaction can actually settle. And I believe one nice thing about crypto payments is you get finality, because crypto transactions are irreversible by nature. But at the same time, you get, at least a lot of times, you get predictability in terms of the exchange rate, and also you get a good amount of assurance about, especially if you're using DeFi through smart contracts, about what is really happening in every step of the way. So you can simply just then also forget about chargebacks and things like that.
So I really like the fact that you mentioned chargebacks and security overall, because it's one of the most complicated topics these days, and it really feels like it is a very secure and transparent way in how to solve this issue. But there is one more issue, and I think, like in the markets, like you mentioned, especially the markets without like a proper payment infrastructure in the market. Is there a way that, or maybe it's something you can also talk about, that a custodial wallet maybe can help remove the friction from the registration to the first time deposit or the first bet also, because this is like probably one of the largest bottlenecks of nowadays operators, and especially operating in like emerging markets, like as you mentioned. So the question is, how can a self-custodial wallet shorten the time from first registration to first time deposit or a bet afterwards?
So if we look at the classic Web2 experience, what really happens is let's say you go to a gambling website. In some cases, you either go in through by simply entering your email and password, or you perform a social login. From that point on, you either have to fill out a really long form, and that's where the drop-off happens. And then in some cases, you have to go through KYC. And I do understand a lot of times, this is something that we have seen, that people willing to gamble in crypto do not really have a crypto wallet of their own. So they're constantly pulling money from big major exchanges like Coinbase or Kraken. Now, this definitely brings a lot of friction in the whole experience. Now, if we try to look at how would a self-custodial wallet work in the same scenario, we'll have to make a few changes, but let's go through the whole exercise. I believe the first thing that these operators will have to include, or these gaming sites will have to include is ability to connect your wallet using a protocol. And the protocol of choice for us has been Wallet Connect. Wallet Connect is a peer-to-peer communication protocol, encrypted end-to-end, which can help you move money across, but not only help you move money across, but it can also help you in proving that you own a particular wallet, so proving ownership. So the experience is fairly short in this particular case. So you simply go to the website, you scan a QR code to connect your wallet. Your wallet is connected. In some cases, the website would ask you to prove ownership over a wallet. In that case, you have to provide a signature. Then again, only takes a second. From that point on, your wallet becomes your identity on that particular platform. Your web app can always ask for more information. For example, it can ask you for your name, in some cases for your KYC information and all of that. But the whole initial journey of doing a lot of manual entry about yourself, you short circuit the whole flow by simply scanning a QR code, and then you're in. From that point on, the web app would completely rely on you having ownership over a particular wallet. And then every important action from that point on would require the intervention from the user in order to make payments, or even in some cases to pull the money from these platforms.
So it feels like you got discovered, but let's talk a little bit about retention, loyalty, and the lifetime value, because it feels like, our industry very much focused on the acquisition, not this much about retention. It's quite a painful topic. So I just wanted to hear your perspective. So how does giving player control over their own funds, and especially instant withdrawals, could improve player loyalty and the lifetime value is the result?
So one thing that we've definitely seen, that anytime a player wins a particular, let's say a game, or even if it's some games like poker or anything like that, then the first thing that they always do is to withdraw all of their funds back to their own custody. In some cases, we have also seen them withdrawing the money back, or withdrawing the winnings back to a centralized exchange as well. So from numbers, we can definitely see that has been the experience. But we are even going one step ahead. So what we're saying is, imagine if you're playing poker, or if you're just playing something else, something like marbles. Once you win, your money should be automatically sent back to the wallet that you own. So you don't really have to, operators do not really have to act as custodians, because it also puts them at a lot of balance sheet risk. And especially in custodial systems, all the money that you hold can be treated as debt as well. So the model that we are trying to propagate forward is the user controls the wallet, or the wallet is the identity. The user would deposit money on demand, and then exactly when the game is over, then the money would be deposited back to the wallet. Other retention tools that we're looking at this moment is to introduce a self-custodial debit card, so that you have the winnings back, but then you can immediately spend the money in your real world activities. And at the same time, it's really easy with the setup. It's really easy to bake in some rewards programs as well. So you can give out Bitcoin on layer 2. In terms of rewards, our perspective is, it's always good to give people something of real world value, not a token which is going to depreciate by 90% in next 1 year. If you give out Bitcoin, then obviously it appreciates at 20 to 25% year on year, and adds a lot of value. So the journey would be withdraw the money back automatically to the self-custody, and then let the user decide what to do with that money. Spend it through debit card, off-ramp it to your own bank account. That's possible as well. Or you could participate in various DeFi activities like yield-bearing assets or vaults. Or you can even swap the money to something which might give you more returns. Or if you are a meme coin fan, convert them into a meme coin if you like.
Yeah, totally. Thanks a lot for these insights. So if you could give the operators listening out there just one piece of advice, like which first actions should an operator take to pilot crypto deposits?
I think with all the maturity and the tooling around Web3, what I would definitely suggest is that Web3, Web2 and Web3. So when I say Web2, I'm mostly talking about all the login experiences, right, where you would either use an email and a password, or you could use some social login. So there are a lot of tooling that exists today where it makes it really easy for you to have connected experiences with wallets as well. So why not put Web 2 and Web 3 at the same spot so that users have more freedom to decide what they would like to use? Once you have that, and once the user is connected through his wallet, it definitely opens up a lot of interesting possibilities. So you can definitely request user for more information, and it automatically pops up in the wallet. Sending the money always would require 2FA because you are prompting the user through a secure channel. And then since you already have access to the user's wallet, you can always withdraw the money back automatically. Or if you wanted to bake in another step, you can also ask the user while withdrawing the money. So this definitely brings in some really nice possibilities around not only self-custody, but a really more organized, a neater experience around onboarding people.
Thanks, Mitul. I really appreciate you sharing this very clear and very actionable insights with the audience. Listeners will gain a lot of real value from this episode. Thank you so much.